Hi, everyone. Welcome to the OutRetail podcast. Today we have with us Michael Stanley. Hi, Michael. Welcome to our podcast.
My pleasure, of
Thank you so much for your time.
course.
Uh, just for your information, Michael comes with decades of experience lending money to various brands and retailers, which is vital element for running any business. While doing so, apart from that, Michael advises various brands and retailers in his capacity and helps them grow. And he's also a part of the advisory board of Fashion Institute of New York. For he spans himself across, the financial space, works very closely with retailers and brands, and also in the academic space, building leaders for tomorrow. With that introduction, Michael, I would like to, ask you, you have seen so many brands and retailers in your career, particularly fashion and lifestyle retail. I would like to ask you, what really makes a brand succeed? Yeah, I'm sure that in your view, what is very important for succeeding in the fashion business?
Well, I think really one of the key metrics, Ganesh, is their ability to manage their cash flow, and particularly how they manage the movement of their inventory. I think that's really what one of the key um, metrics that you would that we I would look at and we would look at as far as evaluating the performance of any retailer, whether it's whether it's a fashion driven brand or retailer, or if it's typically general merchandise, which is somewhat different, but generally it's all comes down to the same valuation metrics, which is it's of course it's cash flow. It's really what we look at. Mhm.
And cash flow is an outcome, right? Now, one needs to generate cash flow, and typically, cash flow in a financial terms is an outcome of what variables?
Well, it's the outcome really of course of their sales and how and of course how they're managing inventory and all the other key elements of a balance sheet. Of course, their expense levels, but generally it's how do we get our inventory to perform at optimum levels? And I think that's really what the challenge is, particularly in today's, environment where consumer behavior is changing and they're very fickle, and particularly with, the younger um, shoppers. So I think you really have to be ahead of the curve as far as managing, your sourcing, your assortment, and how you're managing off price, and of course, and full price, and how you're managing through a business cycle. I think it's extremely critical how a retailer or a brand, for that matter, manages their business, particularly as it relates to inventory.
If I have to deconstruct everything that you're saying, that looks like that inventory is at the core of the outcome of a fashion business. I would say one of the core elements.
Precisely,
Yeah.
exactly.
And now
Yeah, of
we
course,
can further deconstruct this inventory. Inventory is nothing but a bunch of products that the brand has decided to make.
exactly. Yeah,
But the
yeah.
quality of that decision making is so critical before even decide what do we bring to the consumers.
Well, I think the interesting thing in that I'm seeing is that retailers and or brands really can't rely solely on traditional market research and their competitive analysis. I think that because as we chatted about the consumer behaviors, and particularly the increasing use of e-commerce requires a much more dynamic approach, and not specifically focused on non-tradition and their old tools. I think they have to look at non-traditional data, whether it's from web scraping or social media analytics, that could provide, very helpful and leading indicators of trends. And of course, what they need to do is look for these untapped white space opportunities, and furthermore, look for disruptive trends than that were much more challenging to detect from older conventional methods. Um, yeah, so I think that's really what I'm seeing today in today's environment. Hmm.
That's wonderful, Michael. I think if I hear you right, what you're basically saying, put consumer at the center of decision making. And consumer tastes and preferences are changing so fast. A static way of forecasting what would happen maybe 1 year from now may not cut it anymore.
Yeah, this is true, and I think that as an example, one of a retailer that we have a relationship um, was using has used predictive models that happen to be built on alternative data. And what they were able to do is identify an emerging, direct to consumer brand that was quickly gaining market share in their category. And what they do, they were able to pivot their own product assortment, and using this strategy to compete effectively. So I think that's one example. And then another example is a client in the CPG space that had tapped and used web scraping, pricing data, to really detect an unexpected competitive price war that was, unfolding. And again, this enabled them to make, to pivot and make real-time adjustments to protect their own margins. So I think these tools are that exist today that are crucial to helping these retailers stay ahead of the curve.
Yeah, absolutely. I think what we also see is that it's very important for brands and retailers to get pulse of the consumer. And in that context, it's not about just collecting data, because what happens when you collect just data as is, you're going to get the view of the shelf. And we all know a lot of products on the shelf in the market, consumers do not like. So having a non-traditional, a consumer demand view of this data is going to be extremely powerful. Wonderfully said, Michael. I think if I have to just recap, what you said is inventory is at the core of make or break of a fashion business. Getting that quality of inventory decisions, which is very challenging considering all the supply chain challenges of the industry, getting that
Yep.
right is very important. And to get that right, you need to get the raw material, which is getting into the decision making process, which is the intelligence, and which needs to be ongoing and always on basis for very informed decision making.
No, precisely. I really think that the better intelligence that could be available to a retailer or a brand. I think that the players that use these available tools are going to win the race. I think who's got the best tools, are going to really far exceed their competitors. It's as simple as that. And it is. It's because of the sourcing cycle, and today it's very concerning as to all the various and assorted challenges, where they're buying goods, where they're sourcing goods. tariffs, no tariffs, and to be able to manage that effectively is really crucial in today's market. It's tough, but yeah.
And the other thing we have seen also is intelligence when you combine with agility of bringing products to market can be a huge amplifier, because the time itself is a huge differentiator in the business. Apart from just the product, when are you getting that product? Therefore, the timing of the product, particularly seasonal businesses, are super important. What's your view about that?
No, it's crucial. I mean, you have to have the product at at retail at the right precisely at the right time that consumer wants it. So, there's so many different variables, right? There's weather concerns, right? There's holiday maneuvering. There is logistical issues, how do you get it in, properly and so forth, and efficiently. And then after, certainly after the season, how do you dispose of that unsold inventory, which is, really unfortunately, the most challenging aspect of a retailer, and all this predictive analysis enables a brand and or a retailer to navigate through those road bumps. It's as simple as that. I mean, it's these tools do exist, and I think they're crucial for the successful companies to use them effectively and efficiently.
The other thing I just want to bring up is, when a brand makes, let's say, 100 products, and what we've all seen is that few products really do extremely well. And let's say we call them hits, right? And there are misses on the other side. And these hit products most of their products sell at full price. They make maximum margin. In other words, we have seen with some of our clients where how can we increase the number of products which actually reach the hit area, in the sense they become bestsellers. The more the bestsellers we make, the lesser the misses that we have. Overall, not only increase your revenue and also make high profit margin products. Right? And we have seen that consumer intelligence and informed decision making has increased the number of hit products by close to 50 to 100%. I just want to
Hmm.
understand from you your perspective on the financial side of it, how hit products really make difference to a brand's overall profitability.
No, that's really the juice, right? The hit products, that you have the right product at the right time, and be able to ride that momentum for those better choices, right? Not every item that a retailer is going to source and bet on is going to be a hit product, of course. But I think it's really key, um, to build this momentum for these winning items. And, whether it's pricing optimization or, precise inventory planning, and, of course, being aware and of the competitive market, their competitors, and demonstrate really how the value of these key items can pull you through, through quick wins. And I think that the data sources and these analytical capabilities that the better performing retailers should be using, are going to, certainly prevail in this market.
Yeah, absolutely. And as I just think about it, in balance sheet, people talk about lots of assets, right? I just want to ask you one question. All of this intelligence comes from data, and data is a huge asset for companies. Do you think at some point one should consider data is also an asset for a company? It's not in any balance sheet financial terms. What do you think?
It's probably the most, in my view, one of the most important assets, and it doesn't specifically under um, accounting methods. It doesn't, it's not recorded. But however, in the best data is going to help the company manage all the rest of their assets on their balance sheet. It's how do you use that data effectively to to anticipate and to manage your business through a cycle, of course.
If all the other assets are going to be better managed with data, better data be at one level higher in terms of an asset for an organization, right? And I'm sure a lot of leaders watching this would be already collecting a lot of data. The question is the quality of data and the diversity of data, which is going to be very important in building this asset, right? Just want to summarize, everything that we have discussed, Michael, is
Mhm.
if you make really high quality consumer loving products and more of them, we are seeing that we will do more revenue because consumers like them. And when we have more revenue, we are left with lesser unsold stocks. In other words,
Mhm.
we have lower discounts. So we have higher revenue, lower discount, which means we have lower cost. Because things are moving fast, overall the inventory turns fundamentally has to be more. And if I have to just look at free cash flow, it addresses most of this other than capital assets. In other words, higher the free cash flow if you have better informed decisions with consumer at the center.
Right. But it all comes down to cash flow, right? So if in fact, as you mentioned, if you were successful through a business cycle, in riding the wave of a significant amount of hot items, right, that blow through, that carry you through and enable you also to manage the ones that don't perform as well, but yet you're managing those, and you're in a sense riding the coattails off the higher performing items. Perfect, right? And then you end the season. Oh, okay, fine. I had fantastic performance with these key items, and yet I was able to dispose or liquidate, call it, the items that, okay, fine, didn't perform so well. And then you're liquid at the end of a business cycle. So it's a wonderful day for a retailer to
So,
be able to do that.
and that's a great note to go to the last question, which is if you have to give one advice for the audience in terms of how can they look at improving their overall business health.
I would say that it's really Ganesh, I think it's the data and how effectively you're using it, and which one, how are you implementing it. And I think that these tools will either enable a retailer to either survive or not. And I think it's difficult. But but listen, using these analytic tools and seeing beyond the curve enables them to be successful. And I think really that's the key in today's rapidly changing every day. And I think that's really what I would suggest.
No, well said, Michael. It's all about data and seeing consumer through the data and putting them at the center will make us win with the consumers. Not only it will help the health of the business, and the industry makes a lot of wastage. Not only we improve economic sustainability, we'll also improve the environmental sustainability, overall reducing the carbon footprint. Thank you so much, Michael, for being with us on this podcast. And we really enjoyed it. And thank you for your valuable inputs. And I'm sure the audience would love this. And thank you, everyone. And we will come back soon with our next episode. Have a great day.
Ganesh, thank you. Have a great day.
Thank you so much.